Crypto holders, what if I told you the next crypto bull run isn't happening because of hype? It's starting because the global economy is running out of something it depends on to survive, which is oil. Right now, we're seeing supply shocks, rising costs, and economic stress ripple across the countries. At the same time, those same countries are quietly turning to crypto, not speculation, not hype. This is survival. So in this video, we're going to break down what's happening with the energy crisis, how that's going to impact the markets. We have the Fed CPI rates coming back in. We're going to cover that. We have Hong Kong, HSBC, Standard Chartered, something going on with that. It's amazing to see this happening. This is where we're starting to see this true adoption take place. And then we have an announcement coming from Japan. It has to do with crypto and what they're doing with it. You do not want to miss it. And on the back end, we're going to take a look at something that happened with Securitize as well that shows we are getting closer to this adoption. So you're not wasting your time here. You're on track. Stay patient. I know it's hard to stay in this market. I know you're getting tired of all the positivity and not getting those rewards from it, but this is how a true investor will invest. You invest when things are unsure. You invest when things look like it's the worst time to do it, because that's when true wealth is built. So let's go ahead and get to this first story that's going to come from Crypto Rover, and this comes out on April 10th, 2026, and has to do with the US dollar and the decrease we're seeing in it. And this is something we've been seeing for quite some time, so it shouldn't really be a shock to anybody, but let's check it out. It says, shocking, the US dollar has lost 20% of its purchasing power since 2021, the biggest 5-year decline since 2005. And this was no secret. So if you've been around for a while, and a lot of my audience really is, 30 and above for the most part, you were around for 2008's crisis. We saw this happening. We felt the impact. And not a lot of people were ready for it, right? And that dollar has been declining rapidly since that time has happened. And we're starting to feel that major impact. And this is why it's no secret that crypto is here at this time that it's here. It is the plan. It is the new world order to bring global economy together, right? So let's move into the oil situation and what's going on with oil and how it's going to impact you and your investments. This is why we're bringing this to you. I know I speak about crypto projects mainly on this channel, but right now with everything going on, I feel like it's important that you understand the larger view here at play. I know when I first started in the crypto realm, I didn't have the bigger scope of it. I was just focusing on projects. And I'm assuming there's other people like that out there still that could use this information that we're talking about in this video. So let's go ahead and get into the next story that comes from WimarX, and it has to do with the oil recession trends that we see. So check it out with me. It says, warning, something bad is coming. Every single time oil pumped 50% above trend, a recession followed. Historically, this pattern worked out 5 out of 5 times. 1973, oil shock, we had a recession. 1979, Iran Revolution, recession. 1990, Gulf War oil spike, recession. 2000, oil spike, recession. 2008, commodity cycle peak, Great Recession. And as we look down here, it says it hits everything at once, and this is the bigger impact we have, which is the higher diesel, higher shipping, higher power cost, higher inflation. And as we keep rolling down here and actually look at this chart, you have a better idea what's going on here. You can see, like they said, 5 out of 5 times it hits over that 50%. We go into that recession. And keep in mind, this last update was 2/3/22. And as you see, we are starting to see that spike above 50. This is something that's been happening quite some time now. It's not as new as people think it may be. It's just getting a lot more attention than it used to get. So we know that oil prices is causing energy to rise, and that's on the rise right now, which will have an impact on the economy because that's going to create inflation, because everything that we move uses energy to move. And keep in mind, the Strait of Hormuz is not just oil. That's just the major topic that's being talked about. There's other commodities out there that we need for our other goods as well, which will create more inflation. This is why we're seeing this breaking moment in the global economy right now. Everybody's essentially getting a reset. Hey guys, while we're here right quick, could you hit the like button if you do like this kind of content? As you know, the crypto space on YouTube is down 50 to 70%. I'm sure a lot of other creators are talking about this. So any kind of like hit is huge for this channel. And if you like this kind of reporting, consider hitting that subscribe button. We would love to have you part of the channel. Now let's move on to the next piece of information. What comes from the Kabasi letter and has to do with the energy inflation and what we've seen so far just through March. So check it out. It says, breaking, U.S. energy inflation surged 10.9% in March 2026 amid Iran war, marking the biggest monthly jump since 2005. So we're starting to see that now hit the shores of the United States. We're starting to feel that more and more. And it's important to keep in mind as we think about, well, why we're seeing that for America when America doesn't buy oil from the Middle East. Keep in mind, oil is a commodity, so it's a supply and demand. What else is a commodity are these projects you're investing in, or at least the majority of them, or some of them, depending on what you're investing in. These crypto projects like XRP, HBAR are being classified as a commodity, supply and demand. So think about how that pricing will be affected once this is in full scale. Keep in mind, the world essentially is in beta test right now when it comes to crypto. That's important to understand that. Let's move into the next piece of information that comes from Bull Theory, and it has to do with the CPI numbers and what's coming in, just announced on April 10th, 2026. Read along with me, check it out. It says, breaking. U.S. inflation came in at 3.3% for March, below the forecast of 3.4%. Every single number today came in lower than expected. Core CPI came in at 2.6%, forecast was 2.7%. Monthly CPI came in at 0.9%, forecast was 1%. All three numbers beat expectations. The Iran war oil shock still hit hard. Inflation jumped from 2.4% in February to 3.3% in March. That is the biggest single month jump in years, but coming below forecast gives the Fed some breathing room it did not have yesterday. Rate cut hopes just got a small lifeline. If oil keeps dropping after the ceasefire, April CPI could look significantly better. That is when the real rate cut conversation begins. So rate cuts has been a big conversation when it comes to the Fed. There's been a lot of back and forth. It's not going to happen. It's going to happen. There's a lot of eyes on this right now. It's important to keep in mind that there's other factors outside of the US that will impact the stock markets and the crypto markets, which is something we're going to talk about here in a second when it comes to Japan and their bonds. It's very important when we think about that and the reverse carry trade, because that's going to impact our market, even though our market could be looking good or whatever. There's a lot of outside forces that could change that. So it's important to keep that in your pocket for later as you're looking at different investments for yourself. Let's move into the next story and kind of put all this together. I was thinking about the economies collapsing around the world. What's a way to see if that's true or not? Well, it's gold, right? Most countries are moving to gold as their main supply in their central banks, right? So check it out with me. This comes from Cointelegraph on April 10th, 2026, and has to do with exactly that, the gold supply. So check it out. It says, global central banks are now hold more gold than U.S. treasuries, per Bank of America Global Research. And as we pop open this chart here, you'll see that the foreign holdings of U.S. treasuries percent of total reserves is this line here. And as you see, the gold line is now passing the U.S. treasury line. We are definitely starting to see U.S. dollar dominance take a hit in a major way. And you're seeing that through the buying and supplying of gold. France just did the same thing. They're loading up on gold as well. This is a big move. This is a big indicator that central banks around the world are getting ready and prepared for a massive shift of what the world economy looks like. And this is the one big indicator you can use to see if that's coming or not. So as our economy is collapsing and unfolding and transitioning in front of us, we are starting to see more countries move into crypto, more legislation being approved around crypto globally. This is another signal that you're on the right track. You're investing in the right asset. Now you need to make sure, or the asset class, you need to make sure you have the right asset that is going to be a part of the new system, right? That's why research is very important. That's why I believe it's more important to watch what's happening and study what's going on versus studying just price action, because there's not a lot of information that you're going to need from that if you have the bigger picture. I hope that made sense. Now let's move into the next story, which is Japan and what they're doing with crypto. This is a big move, especially when you think about Japan and what a big impact they have on the economy. They're the 5th largest economy, by the way, so think about that. So let's go ahead and move into the story here. It comes from Bull Theory on April 10th. Read along with me. It says, Japan's cabinet just approved a bill reclassifying crypto from payment method to a financial product. Japan is the world's 5th largest economy, and this regulatory clarity will remove uncertainty and boost confidence among investors. The bill also bans insider trading and requires annual disclosures, aiming to ensure market fairness and transparency. So Japan has recognized crypto as a financial product. Another massive move for the crypto adoption. We have South Korea doing the same thing. We have Africa doing the same thing. Other countries around the world is doing the same thing. We're starting to see this increase in global adoption of crypto. It's almost like the world is positioning themselves, getting ready, and once that's done, you'll see America flipping that switch, meaning the Clarity Act being signed. If you're paying attention, their legacy banks are positioning themselves, buying time. Other countries are buying time. The market's just not ripe yet for it. I think we're getting super close for it, but there's a bigger picture that has to unfold here. But when we're looking at that, we can see another sign of that happening, and that has to do with the Japanese bonds. So check this out from Crypto Rover. He says, Japanese bonds are going parabolic. You know what comes next. And as you pop open this chart, you'll see the bond is at 2.4% right now. So this is where the reverse carry trade does come in. We had the Japanese yen being extremely cheap to borrow, and people would use the yen to invest in other countries and their investments, such as their businesses and crypto, etc. But now money is going to be leaving those markets and going back into Japan, as we're starting to see that happening right now. And that's no secret, because when we think about what's going on with America buying back all their treasuries bonds, they bought back, was it $1 billion? So we're definitely seeing the money fly out of America, moving back into Japan. And this is what I was saying earlier about just because the US economy is looking great doesn't mean that it's going to react the way that you think it's going to, right? There's other factors outside of America we need to be paying attention to, because it definitely impacts our markets as well. Now, let's move into the next story. It has to do with Hong Kong, HSBC, and Standard Chartered. I'm actually going to use a post that comes from Nick off of X, so check it out with me. It says, USD stablecoins will eventually drop in dominance. The world is waking up to stablecoin boom, and we're witnessing the rise of the on-chain FX market. Trillions per day, never sleeping, and moving more efficient than ever. We are watching the revolution in real time happening. And this is a post that came out from Cointelegraph that says, Hong Kong grants first stablecoin licenses to HSBC and Standard Chartered-led group. So Hong Kong is giving licenses for HSBC and Standard Chartered. And Hong Kong has been the kind of the breaking point. People saying China's not moving to crypto, they're not going to approve it, which the quite opposite is happening when we're actually paying attention to what's really going on in China. So we're starting to see that. But when we think about HSBC, we think about Standard Chartered, they are a massive player and connected to Ripple, right? This is no secret. This has been a big conversation for quite some time. So Ripple is getting heavily connected. They're already connected in Japan. Now they're connecting in Hong Kong. They are ready to go in Africa, like I was talking about earlier. So we're starting to see Ripple getting more exposure as well globally. We're starting to see crypto again become more prominent. And as this is happening, as we're starting to see the rest of the world maneuver into crypto, we are getting this kind of information coming from the CLO of Coinbase and the CEO of Coinbase, and it has to do with the Clarity Act. So check it out with me here. It says, from Paul CLO, it says, we agree indeed. Then Brian says, we agree. Thank you, Scott Bessent, for saying it. It's time to pass the Clarity Act. Grateful for all the bipartisan work among senators and staff over the past year, several months, to make this a strong bill. So what I want to point out about that is, it's that verbiage there. It sounds like they have come to an agreement, maybe behind closed doors, and it might just be the first draft of an agreement, and they could always kick the can down the road, as you know. I mean, just keep that in mind. But this verbiage here within the CLO saying, Chief Legal Officer, saying that they agree with it. So it's almost like an inside nod saying, hey, we're good to go. We're good on our end, at least. Now, the banking committee could, totally throw a wrench in it, as they always do. But just keep that in mind. We may be seeing that sooner than we think. And also, while we think about the Clarity Act, just because if it moves forward doesn't mean you're going to see that initial flood of money into the market. There's still some phases that need to unfold. We need the president to sign it. After the president does sign it, we have to wait for that to officially get put into law and to go into effect. Once that's into effect, then you have the institutions moving their money into the market, right? So there's going to be some lag effect to happen. It's just a good sign that you're in the right time, right space. This is a great momentum if and when that Clarity Act gets pushed forward. It is a massive event. Just don't expect the millions to flood in right behind it, is what I'm trying to get at. Like, be calm, be patient, and do your research, is what I'm trying to say. So the next story comes out at a perfect time as we put all this information together and we start to see the bigger picture unfold, and everybody's waiting for BlackRock to really hit the market. Well, check this out. This comes from Securitize on April 10th. And this recent announcement to me shows that BlackRock, because Securitize and BlackRock are heavily tied together, right? That BlackRock is getting ready to move into the market as well. Check it out. It says, we've integrated with Tron Network to bring tokenized asset issued by Securitize to one of the world's largest blockchains. This partnership expands multiple chain footprint. And as you see here, this graphic here, it says Securitize integrates with Tron Network for tokenized assets. So if you're paying attention to what's going on around you, put all this information together. This isn't just another cycle. This is a shift, right? So the people who understand it will benefit from it the greatest. So let's put all it together and you think about what's happening. The economy is breaking down. We're hearing more and more information come out that other countries are adopting crypto, making it legal, giving clarity around crypto in their countries. We're starting to see the Clarity Act getting closer. We're starting to see more partnerships come out. We're starting to see Wall Street step in a major way. We are getting super close, guys. I know everybody's tired of getting the can kicked down the road, but just hang in there. We're almost there. This is what it feels like to invest in something that the major institutions and countries, central banks are doing the same thing. You're playing with the big dogs. It feels like you're losing when really, in reality, you're winning. So stay patient, do your education. Don't worry about the price charts. Look at the bigger picture and step back and take a breath. Everything's going to be okay, guys. Hit that like button if you like this kind of reporting. Subscribe if you like this no hype, no hopium, just facts. We'd love to have you part of the channel. But before I let you go, take care of yourself, take care of the people around you, and become the change you want to see in the world. Thank you guys so much for hanging out. I will see you on the next one.